All right. Good morning, ladies and gentlemen. Welcome to the Bank of Canada interest rate prep decision. Hopefully you can all see my screen and hear me clearly. Do let me know if you have any issues. So also don't forget to share the video with your fellow traders and friends if you found these videos in the past helpful, and also subscribe to the channel. But let's get into it. We've got about 30 minutes to the rate decision. So first of all, the Bank of Canada, where is the economy at the moment? We already know that they usually meet around every 6 weeks to make decisions on where the interest rate should be set for the overnight interest rate, and what kind of monetary policy that or what kind of steps they'll take as well. And sometimes, and a lot of the times what we do get is the expectation of where the economy is expected to be in the future. But sometimes most of the time we do get commentary on what they've seen in the economy so far. So that's also another thing to be aware of with the Bank of Canada today as well. So we'll go through some more stuff on what to expect from them. And then the deviations, we'll also look at that and how the last market reaction had happened and why it had happened. So first of all, where is the economy at the moment? So CPI, or inflation in Canada, unchanged at 6.9%. You also have GDP quarter-on-quarter annualized, which came in better than the forecast, but was lower than the second quarter data at 2.9% versus Q2 of 3.3%. Canadian employment change came in at 10.1K versus the prior 108.3K. And we also had the average hourly earnings, which had seen a slight tick down to 5.4% versus 5.5%. The unemployment rate also had seen a slight tick down as well to 5.1% from 5.2%. Retail sales in Canada for the month was at minus 0.5% versus 0.7%. PPI year on year also was at 10.1% versus 9%. So, all right, PPI, it's an important indicator of how much businesses are being charged for the goods that they need or provide the services that they need to customers. But in Canada, it hasn't really seen too much of a reaction. But in the US, with big deviations and the sentiment that surrounds PPI, of seeing a slowdown in PPI figures in the US, had moved the markets enough to consider that the Fed will go with a 50 at the December meeting, or cement that as well. But in Canada, we haven't really seen too much reaction to the PPI report, but it's still important to understand how strong are inflationary pressures in Canada at the moment, and will it kind of rock the boat enough for the Bank of Canada to go either with a 50, or maybe not enough to and stick might go with a 25. So it's all mixed. We'll go through some of the sentiment too as well surrounding whether it'll be a 50 or a 25 base point hike today. So the raw material price index at 1.3% versus the prior of minus 3.2%. Then the previous Bank of Canada rate decision on October 26th. So they said that inflation in Canada remains excessive and underlying inflationary pressures remain high. The economy is operating with enormous excess demand. Annualized GDP, as said, they'd seen that Q2 GDP seen at 3.3% versus 4% in July, and Q3 at 1.5% versus 2%, Q4 0.05%. They also said that future hikes will be influenced by the evaluations of how tighter monetary policy is functioning to dampen demand, and how supply issues are being resolved, and how inflation and inflation expectations are reacting. Then you also had Macklem as well adding a comment afterwards, saying the Bank of Canada sees a significant slowing of the Canadian economy, which plays into the hand of why they've notched down the amount that they're hiking rates by, as well as the inflationary pressures that they see in Canada slowly starting to dwindle or weaken a little bit more than the Bank of Canada had expected. So Bank of Canada views then. So 10th of November, you had Macklem saying that the Bank of Canada is attempting to balance over and under tightening risks, And a minor recession could be the price the bank is willing to pay to reduce inflation. That was an interview with CBC News. So all you've got to take that is that the bank, just like all the other central banks, are going to do what they need to do to get inflation to their 2% goal. And if that does involve damaging the economy a little bit, then that's the price that they're willing to pay for. But if we do see that these rate hikes and are having a much bigger effect on the economy than had been anticipated by a central bank, of course, at the moment, all the central banks are looking at maybe a minor recession or soft landing within their economies, but nobody's really said that there would be a severe recession caused within the economy. So that's one thing that I think will be interesting to see. If they do go with a 25 base point hike, then that could be that the reason is that they see stronger risks to the Canadian economy, and they might need to slow down even further with their rate hiking path, but stating that they will need to continue hiking rates to try and bring down inflation without trying to cause a severe recession. So in summary, dovish comments of the central bank seeing a stronger recession occurring in Canada as a possibility, that there is less chance of a soft landing, but there is still a need to raise interest rates by a smaller amount, and also to make sure that supply chains don't disrupt Canada's economy that much. So, November 23rd, you also had Bank of Canada's Governor Macklem saying that tightening is getting closer to an end, but we're not quite there yet, adding that he expects inflation to remain quite high for the rest of 2022 before beginning to fall in 2023. So, i.e., that means continuing to see large declines in the inflation reports that Canada gets. Then the 22nd of November, you had Bank of Canada Senior Deputy Governor Rogers saying that high interest rates are starting to slow the economy and contain inflation, adding that a stronger US dollar may exacerbate inflationary pressures. So that's also another thing that the Bank of Canada and other central banks are taking into account, is the strength of the dollar with the pace and quickness that the Federal Reserve has taken to raise the interest rates, which in turn, of course, will raise the value of the dollar, making things more expensive in the US economy, making it harder to borrow or lend money to consumers or businesses. And in turn, that's what they're talking about, is that there may be some added inflationary pressures that will probably go away at some point, but they will have a focus on it to see how it affects the inflation reports that come out in the future. Then the sentiment and views. So one of the key things that's kind of rocked the markets at the moment is, first of all, China COVID easing. There's been a lot of talk with, actually today they were supposed to have a meeting in Beijing to talk about COVID and the pandemic. But no comments have come out whether or not China is going to continue to ease or remove their stringent lockdown altogether within China. Remember, you have key areas in Shanghai that have a lot of manufacturing as well. You've had Apple that's been affected by the Foxconn riots as well, or the disruption with people rioting, protesting against lockdowns. That's caused a bit of instability within China, and in turn has led to, as said, Apple maybe looking to other places in general anyway, looking to other areas in the world, such as in India, where they've been developing or making iPads instead, and they've made older models of the iPhone or iPhone 14. So there's also that implication as well as to the strictness of these China COVID lockdowns and the instability and the uncertainty that surrounds the China COVID lockdowns. There's also no Russian gas for Europe this year too, so that's also had an effect on oil prices as well. Remember, the oil, if you do see higher oil prices, that usually tends to favor a stronger Canadian dollar, because the Canadian economy is more or less based on providing minerals and natural resources globally. Okay, so if you do see higher oil prices, and if you've seen my past videos when I've done the EIA inventories release or talked about the Ukraine war and the effect on the markets, you will notice that the Canadian dollar had seen an appreciation when oil prices had begun to rise. So, of course, no Russian gas for Europe. Of course, they'll be reliant on their own storage facilities that they have in place to weather the winter. But there's also the price cap too that the EU had placed on Russia at $60 a barrel, and then you had Hungary actually yesterday that removed the price cap because it wasn't because of there was a lot of demand for the oil at pumps, so they had to kind of think, okay, they need to kind of raise prices a little to kind of sustain that demand, control that demand that there is for energy at the pumps. So that's also another thing too that's affecting sentiment at the moment. Now the views then, so the 5th of December, you had Scotiabank saying that the latest Canada jobs data, according to Sean Osborne, indicates a fair degree of resilience in the economy, which could signal a more aggressive rate hike from the Bank of Canada later this week. You also had that they said that the rate cycle is nearing a peak, and what the bank says is that the policy outlook may be more important than what it does. A 25 basis point hike with a mildly hawkish guidance and a little more tightening to come might be more supportive than a 50 basis point hike with a neutral policy outlook, signaling the bank was moving to the sidelines. So what that means there is that if you do get a 25 basis point hike, but you get a more hawkish Bank of Canada in relation to how strong the jobs market has been, or how maybe the inflationary pressures are still stronger than expected, then that could switch the movement, in the initial move towards the downside from a 25 basis point hike actually towards the upside instead. So what you're expecting is more volatility, and you could see more of whipsawing from the Canadian dollar within the markets. And that's what Scotiabank, Sean Osborne is saying there in essence. Then Citi say that it would send the incorrect message, and it would be a peculiar time to further slow the rate of hikes, as according to Veronica Clark and Gisela Hoxer in an investor report. So they anticipate a 50 basis point increase, saying it doesn't kind of make sense to do to quickly slow down the pace of your hikes if there are still inflationary pressures, and considering how quickly the central bank has been raising rates, and probably the only major central bank, or one of the major central bank to go with a 100 basis point hike at one of their meetings, and considering also all the surprises that we've had so far with the Bank of Canada when they were expected to raise by 50, but they did a 75 basis point hike, and when they were expected to raise by 75, they did a 50 basis point hike, which kind of surprised the market, which definitely surprised the markets. So that's what we've kind of got to be aware of, is that Citi saying probably doesn't make sense for them to go to a 25 basis point hike so quickly. RBC says that it makes sense now to slow down on rate hikes and be more data dependent. So according to Josh Nye, Assistant Chief Economist at RBC, he anticipates a 25 basis point increase today and sees no obvious signs of a stop. So it will be, and also just to note that it will be the highest since 2000. It'll be the highest rate either way, whether we get a 50 basis point or a 25 basis point hike. The rate, or the overnight rate for the Bank of Canada, will be at the highest level since 2008. Also, the other thing of what not to expect then. The pit trader. Yeah, of course. It says, oh, sheesh, new PowerPoint style. I like it. Me like it. Good. Yeah, I thought I'd kind of add some pizzazz and jazz to it. Why not? But as I was saying, so what not to expect then from the Bank of Canada today? So there is no expectation for a new set of economic forecasts that are expected. So what that means is you're expecting the Bank of Canada to talk about what's happened in the economy so far and what they feel about that past data, but they won't give their forecast as to where they expect inflation to be in the future, maybe a couple of years or 3 years, 3 years down the line, or where GDP is expected to be. So more or less looking at old data and talking about that, analyzing that, rather than forecasting or foreshadowing or giving a new outlook as to where they see the economy in the future. So in that case, we might not really, we're kind of reliant on what they feel about where the economy is at the moment now, and whether or not that their hiking path or their rate hiking cycle has done enough to kind of put a dent into the economy enough for the central bank to take a move or notch down to a 25 basis point hike. And, the only surprise could be, if they do decide to surprise the market, is maybe talking about where they expect the rate to end up, right? The overnight rate. Whether they say they need maybe maybe they need 50 basis points more of tightening. That I would be surprised if they mention that, if we're not expecting any new economic forecast. There's, they have surprised us with the rates, but and some of their statements, but you never know. But that's something just to be aware of. Bricktop says Dixie up or down if Bank of Canada rate higher than expected. If it's higher than expected, well, what we've seen in the past is that the currency, or in this case the Canadian dollar, if they do go for a 75 basis point hike, you'd expect more strengthening from the Canadian dollar. So in turn, other currencies would weaken against the Canadian dollar, right, at that point in time. So you could see the Dixie move towards the upside, downside instead, if you do get a much stronger than expected rate hike from the Bank of Canada. And that's with the 75 basis point hike, right? But you could still see a 50 basis point hike happening, and then a very hawkish central bank as well that could still rock the markets. Pit Trader said, "Love you, Tony. Always great content with great humor. Thank you very much." All right, so carrying on then, we're nearly done. So other investment bank forecasts then. So BMO seeing a 50 basis point hike, as does Scotiabank, TD to 4.25%. And then RBC and Goldman Sachs looking at a 25 basis point hike to 4%. Okay, so this was the last rate decision that we had. I'll just play the video for you here. So this is a historical reference of what had occurred. So this is about 5 or 6 seconds before the release that we had last time around. So you see that the expectation is for a 75 basis point hike. Now what actually happened is that they surprised the markets and went with a 50 basis point hike. So this is how the markets had reacted. So I've got my EuroCAD, Dollar CAD, and GBP CAD there. And you'll see how the Canadian dollar weakens off of the back of this data that comes out, solely just off of the rate hike amount that they did. 2-1, and there you go. So the Canadian dollar weakened off of the back of that smaller than expected rate hike. Okay, so that should, we'll go through the deviations and how much, or what were the biggest movers and the currency pair market. But that should just tell you that if you do get a deviation from what the forecast is, then you're expecting more volatility. So there we go. So it was a nice reaction from the markets though, right? If we kind of go forward a little bit more, kind of see how long it goes on for, and you can see that the move is sustaining itself rather than seeing like a whipsaw if you get the rate coming in line with expectations. Keep going. Just gonna scroll past and see how long it kind of lasted for. It was still going by the time I ended the stream. And here you go, even the S&P 500, right? This is interesting. So, you know, the reason why you'd seen the S&P 500 move towards the upside, somebody asked me this last time around when I was doing the video, is it's the anticipation of smaller rate hike or less aggressive Federal Reserve as well, right? And what that could do to the sentiment with the Federal Reserve. Well, you know, if the Bank of Canada is slowing down their rate hiking path, although they don't really follow each other so often, it still influenced the market enough where the S&P 500 was taking that, okay, inflation is coming down in Canada. The Bank of Canada doesn't need to do that much. They're giving a more of a dovish statement, a dovish outlook to the Canadian economy. Maybe the Federal Reserve could do the same as well. So that's how the S&P 500 reacted to the market, right? Or of course, you know, even though you had seen the Canadian dollar weaken in the market overall, it's the sentiment, what it means that caused that pop there on the S&P 500. So that was that was the release. Let's get out of the way. Okay, so now we've got FinancialJuice with the live voice and text stream that we have. I'm going to bring up the deviations for you as a final thing. We've got about 8 minutes left to the release. Let's get it up here. Now, the deviations, if you're unsure of what are you talking about, Tony? What are the deviations? So the deviations just represent how the markets have reacted to an economic release that has occurred, okay? Depending on what the deviation was or what was said in a central bank statement, right? So here, so we got the, of course, we had for the Bank of Canada with their decision, have the forecast here showing what was expected, what the median forecast was, and then this was the actual figure, and this shows the total deviation. So there's a 0.25% deviation that you can see there between the forecast and the between the actual figure and the forecast, and it was 0.25% lower than the forecast. So this is how the markets reacted. The biggest reaction in the markets, or in the currency pair market, came from GBP CAD. Okay, you'd seen a 96.2 pip move towards the upside on GBP CAD. And after about 10 minutes of trading, that's what the bracket represents, 10 minutes after the move. So just to kind of make this clearer, so the first reaction that I note is the initial reaction going to the wick of the first candle, right? So to capture the whole move. And then the movement, and then the figure in the brackets after 10 minutes of the release just shows where that candle had ended after 10 minutes of trading. So even after 10 minutes of trading, GBP CAD had the biggest move out of all the currency pairs, and historically, you can also see that there as well that GBP CAD had a bigger reaction pip-wise compared to some of the other currency pairs. Then you had EuroCAD, and that had seen the second biggest reaction. CAD JPY had seen a decent reaction as well of about 65 or 66 pips towards the downside. So all you've got to understand is when there is a deviation in the expectation or the actual figure, right, and it doesn't come in line with expectation, either way, whichever way it goes, you're expecting to see more volatility and more of a reaction from the markets. If it comes in line as expected, then you're looking to the statement that's being released by the central bank to see if it's really hawkish or really dovish, and that will kind of lead the way which way that the markets will go instead. But here you can see when we had the last the rate decision on September 7th, when it was in line with expectation, you didn't really see that much. It's more of a whipsaw-y reaction in the markets, or it didn't strengthen by that much. And post 10 minutes of the release, it calls back, it kind of erases its initial move and goes the other way instead. So, what is expected today, right? Although we have a mix, by the way, this deviation stuff is free, right? All you got to do is just sign up to the MACROACE mailing list. I'll put that in the link for you here. Whoops, I'll just put that here. And that's free, and I'll talk about it in a little bit as well. And what else is included? So that's the deviations for today. So GBP-CAD, and historically, as said, has seen the biggest move from the Bank of Canada rate decision from what we've recorded. Okay, and then the EuroCAD goes next, and then you've got CAD JPY and then dollar CAD. All right, so I've got my CAD JPY up and ready, dollar CAD, GBP CAD up and ready. I'm going to get my Tickstrike opened up as well for the Canadian release. Just get that. Let's see. I'll just bring that over here. So Tickstrike, if you're unfamiliar with what Tickstrike is, it basically lets you listen in to the strength of order flow. Okay, that's what it does. Ooh, I've got the VIX here. Close that. GBP CAD, CAD JPY. Just move some of these around. Probably can move that with GBP CAD to get the EuroCAD up and running. All right, so what will I be doing on the stream today, other than what I've just done now? So we'll get the rate decision, and then I will work my way through what the statement has said, and then I will try and pick out what the most important comment is as well. There may be a little bit of silence from me as well. Of course, there is a service to run at the same time for FinancialJuice. Don't forget, I am the head FinancialJuice analyst as well. If you're unsure of who I am, who's Tony? Who's Tony? But yeah, so just to let you know, if there is some silence, then do not be worried or alarmed. I have not been kicked out of my position. I'm not, things have not gone crazy mad. Well, they might have gone crazy mad, and I'm just working through the flow of things. All right, I've got about 2 minutes left to the release. I'll be back in a couple of seconds, but don't forget to also, as I said, FinancialJuice, what we have here on the website. Okay, FinancialJuice Pro, so you can get a 7-day free trial of FinancialJuice Pro, which has no adverts, no delays to the website at all. Okay. All right. You can use the delayed version if you're starting out and getting used to using a voice or a live voice and text service before you, go ahead with the full version of FinancialJuice Pro. Okay. 1 minute remaining. All right, just go a little pep talk to the team. Just said, Drew is reading the release. So it's just said, good luck, son. All right, so that's 15 seconds left. Don't forget, you can head over to FinancialJuice Live. Okay, 10 seconds. Here we go. What we got? Okay, 50 base point hike as expected. As expected. Okay, CAD seeing upside movement there. Okay. Inflation around the world remains high and broadly based. Q3 Canada GDP was stronger than expected. Okay, so this is more hawkish data coming through from the Bank of Canada, or hawkish comments coming through from the Bank of Canada. So Q3 Canada GDP was stronger than expected. Economy continues to operate in excess demand. Labor market remains tight. What else have we got? They will be considering whether policy rate needs to rise further as well. Okay. So again, Bank of Canada drops language saying policy rate will need to rise further. That is something that was unexpected from the report. So that's what's causing the Canadian dollar to see that strengthening there from the markets. Okay. Uh, so again, Bank of Canada drops language saying policy rate will need to rise further. 3-month rates of change in core inflation have come down, an early indicator that price pressures may be losing momentum. There is growing evidence that tighter monetary policy is restraining domestic demand. Global economic growth is slowing, although it is proving more resilient than predicted in October MPR. Data since October monetary policy report supports banks' outlook that growth will essentially stall through middle of 2023. Inflation is still too high, and short-term inflation expectations remain elevated. I think I might have just missed just an early headline. Bank of Canada raises overnight interest rate to 4.25%. Says they'll be considering whether policy rate needs to rise further. Bank of Canada drops language saying policy rate will need to rise further. That seems a little bit confusing there. But still, a 50 basis point hike had occurred. The Canadian dollar did strengthen off of the back of that release. I don't think there was too much of a reaction. I mean, I'm going to say too much of a reaction. I mean, that stronger reaction compared to what we've seen last time. But let's have a look anyway. So, all right, that was about 40, 44 or 49 pips there. Excuse me, 44, 45 pips towards the upside there. Let's look at, so GPCAD was the biggest mover last time, so that's what we should have been looking at first there. But either way, we know that the Canadian dollar strengthened. Okay, that was, okay, yeah. So a smaller move compared to last time round where we had, if I just bring it back up, where are you? Okay, come on. Where are you? Kinda. Yeah. So last time round on GPCAD we had a 96.2 pip move towards the upside. Today we get 77 pip move towards the downside. So not as strong as a reaction as we had seen last time around from the Bank of Canada. And I think mainly the main reason why you didn't see a lot of strengthening is because of first of all, there's a mixed market reaction from what is the central bank going to do? Are they going to go with a 25 or 50? They went with a 50. Okay, that there is a need to continue with their pace or rate hikes of doing 50s. But the only thing is saying that only point being that they Bank Canada dropping language saying policy rate will need to rise further. But even then, just saying that considering whether policy rate needs to rise further. All right. So, of course, one of the things to consider, yeah. So the Bank of Canada, considering the need to further hike to curb inflation. Okay. Just a bit of a clarification there. It was a bit odd the way that came through, the way that looked. But anyway, so dollar CAD. Let's have a look here. Dollar CAD. What did you do? Okay, that was a bigger reaction compared to, actually no, it might not have been a bigger reaction compared to the EuroCAD, but so far dollar CAD 58 pips down. EuroCAD, what did you do? Oops. Okay. All right. So you had a bigger reaction on dollar CAD this time round compared to the EuroCAD. So I think one of the things then, oops, trying to get just caught in my coat. One of the things then I guess is that, first of all, the central bank, of course, in the US, of course, they're still going to be continuing to hike rates, maybe towards 5%, to be honest, or maybe higher for longer, depending on what we get with the PPI data this Friday too. Okay, so Friday I'm going to be trading PPI live, and that's going to be provided as a live stream link. So definitely join me for that too. But there we go. Overall, so the need to further, considering the need to further hike rates to curb inflation. So that was the surprise element that came from the Bank of Canada there. So yes, so FinancialJuice said that's where we had the live data from the Bank of for the release, and also the data came out there as well in real time. Hopefully that was all. If you are a subscriber to FinancialJuice Pro, hopefully that was quick for you guys there. And to be fair, if I'm checking our YouTube, right, so we are nearly at 2,000 subscribers to the channel. So don't forget to subscribe to the channel. Get us to that 2,000 mark, or really fly to the moon. Get us over that 2,000 mark. Don't forget to like the video, share it as well with your fellow traders and friends. If they enjoy being given the knowledge, then definitely make them aware of this and get that word out there. That Tony's dropping some knowledge bombs, and if it's been useful, then great. But yeah, so as I said, so FinancialJuice Pro, if you're remember FinancialJuice Pro with a live voice and text service, that's something that's available, that's something that is high level and that investment banks use to manage their market risk or to capitalize on potential trades as well that could come through from a headline or economic releases, right? If you're, a lot of retail traders, they won't have access, to a live voice and text service. They might find it more difficult to trade or understand why the markets are moving in a certain way. That's what FinancialJuice does, is we clarify what's going on, why the markets are moving in a certain way. We also have a need to know market risk as well. So if there is a headline that comes through, or if there is something that you've seen throughout the day of the market had a whipsaw for some reason, bit of volatility, need to know market risk will have more than likely have a reason there for most of the market reactions that happen within the markets on the website here on the newsfeed. Now, so as said, FinancialJuice Pro, you've got the link there at the top in the pinned chat in there for you to have a little look at. Bricktop says, "Thank you, Tony, for another stream." Thank you for joining me again. Don't worry, that was me. Just that wasn't a squirrel. Does that sound like a squirrel? No, not a squirrel. All right. Yeah. So FinancialJuice. So we have the PPI data Friday. Let me get that video up for you guys so you can join me live for that as well. Now, also we also have the. If it lets me. Also, we have MACROACE as well. If you subscribe to that, if you're looking at the deviations saying, well, Tony, where do I get that stuff? How can I get my hands on that? Well, you can. You just got to subscribe to the MACROACE mailing list. It's in the comments section there as well. Shame I can't pin more than 2 comments, more than 2 links onto the page, but it is there. So the MACROACE mailing list. Not only do you get the deviations for the upcoming economic releases, okay, for the week ahead, right? You also get the expectation of what to expect in the US session, EU session, Europe session, US session, Europe session, Asia session, okay? It's a short summary of what to expect. It doesn't go into a lot of big detail, and there's not pages or tons of that stuff. So if you're into that, that's not what MACROACE, the main list, is all about. It's one email sent every Sunday, anytime on Sunday during the day, that you receive, that gives you a short summary of what to expect for the week ahead, for the economic releases as well, with a couple of links, and also the deviations for the economic releases as well. And then, so FinancialJuice Pro's there. So Tickstrike as well here. So if you also have a 7-day free trial of Tickstrike.com with here, you can see here with the little tickers going off. You probably would have seen that. Now the market, well, CAD JPY is reversing and similar to what the dollar CAD is trying to do here. CAD JPY getting there sooner, or maybe getting there sooner than the dollar CAD, but that's also included as a 7-day free trial to Tickstrike. We also have unusual activity, which has been really good at identifying, unusual volumes in stocks. So if you have a stock that's been trading for, let's say, over a period of time, unusual activity will measure how much that stock moves. Okay. And then if there is a unusual volume pop in that stock, let's say in the 99th percentile, that there is an unusual amount of volume from that stock or movement, then unusual activity will highlight the movement and display that to you with notification as well. So you can join our free beta test group of our new service as well. If you like trading stocks, crypto, futures, currencies, all that is involved too, that you can also have a look at as well. And then that is it. Oh, of course, finally, don't forget to share the love and give us a follow on Twitter as well at our MACROACE page. But for now, thank you very much. Don't forget to join me Friday for PPI. I'll be doing that at 8 a.m. Eastern Time, of course, about 30 minutes before the release happens, to go through more prep. If you haven't subscribed to the main list already, then do so. We have a very busy week next week with rates coming from the likes of the Fed, the ECB, and also believe the Bank of England as well. So it's going to be chock-a-block for a couple of days next week as well. All right, sayonara. Thank you.